Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's the co-founder at LikeFolio. Welcome back to the show, Landon, and happy Friday.
Thank you. Happy Friday. Good to be here.
All right, so we're talking Adobe in the cloud space. It seems like this is one of the companies that's really taken advantage of the fact that they're able to monetize AI right now. They're ahead of the game. They're the leader in this space. One of the few companies that's monetizing it, maybe along with NVIDIA, the picks and shovels in this space, Microsoft also. But this is a clear winner here. Do you see more opportunities based on your data?
Yeah, absolutely. I tell you what, everybody talks about AI and how it's going to, change the economy. And of course, NVIDIA, like you mentioned, is the easy place, sort of like Cisco back in the 90s, picks and shovels play. But it's which companies are going to actually utilize it to improve their bottom line. And Adobe is really showing that they're able to do this. I mean, when you get on, ChatGPT and test it out, check out its image editing and creation capabilities, and then you go over to Adobe Firefly and compare, it's actually, I think, better. And so they're ahead of the game. Their Photoshop product has improved dramatically because of AI, and they're obviously embracing this. And when I first saw what AI could do, especially with images, I was worried for those Photoshoppers out there. I was like, uh-oh, this is going to be a huge disruptor. But now instead, they're actually making it a tool for those users. And now people who use Photoshop are better at their job than they were before, as opposed to being replaced. So this is a huge win for them. And when we look at the data, it's strong. I mean, their mentions are up significantly on a year-over-year basis. Their web data is up significantly on a year-over-year basis. Happiness is very high at 78%. I mean, we don't see numbers like that typically from LikeFolio. So, all in all, this is a great company. They just reported their first $5 billion quarter not too long ago. Stock sold off a little bit because of guidance. Their annual recurring revenue was a little lower than they'd hoped. But you can see here people talking about the company. It's up about nearly 20% on a year-over-year basis. The stock has pulled back slightly, as has that mention count number. So I think they're sort of in line still. But the run-up, as far as we're concerned, is completely justified by the data. Very strong company.
Landon, do you think investors look at Adobe as kind of an ancillary play to the crowded space of the mega caps?
Yeah, I think that's an interesting angle. First of all, if you think about the way that their business model has changed over the last 10, 15 years, I mean, it used to be you would go buy a copy of Photoshop, right? And maybe it was $400, $500, $600. Now they're charging you, depending on what you get. If you get the whole suite, it's $60 a month for everything that they've got. And that's Photoshop, Acrobat, Illustrator, After Effects, basically anything that works with media in any way, audio, visual, you can have that. And it's a recurring model. So, every business that I've been in has been a recurring revenue model, and it's so much better. And the fact that Adobe now is in on that, it's a wonderful thing for the company. They're going to do great things, and they don't have to continually sell you on the next release, right? I mean, think about how Windows used to come out and here, buy this new Windows or buy this new Photoshop. Every year they're trying to get you to buy the new one for a different reason, and eventually it's difficult. You just want to improve the product and keep your customers using it. And so the subscription model that they've gone to is really strong for the company and investors of Adobe.
Yeah, and Landon, when you look at that, I wanted to kind of hit that mentions count because it seems like the mentions are coming down kind of equivalent to where the stock is now. Is that kind of signaling that maybe this consolidation period that we've had over the last couple of weeks since earnings is going to continue?
Yeah, it makes sense, frankly. I mean, if the mentions weren't coming down, I'd say, hey, this is a great buying opportunity. Right now, it seems fair. It seems like a fair price. Though I want to throw in and contrast a little bit, you look at the web data, we're up about 13%. And yeah, it's pulled back slightly as well, but it's also up a lot more over the last like 6 months or so. So it's doing really well. The web data is very strong. You can see the lows just in last summer, and now we're screaming higher. So I think a lot of that has to do with back to school and the whole you get a new laptop, you got to install this and talk about it and get it onto your program. So back to school surge, I think, is just a little bit of a seasonal thing. You can see it in the past chart here. So I'm not too concerned about the pullback. And really, the year over year is what we're looking at. So this is a company that LikeFolio has been on for quite a while. We've got our customers have been in it since 450, so we're hitting around 600 right now. Very happy, obviously, with what the stock's done. But I do think that moving forward, they have demonstrated their ability to take advantage and turn what really was, in my opinion, a threat to the company, AI, and turned it into an asset for the company. And that's a big ability for a company to be able to do that. So their users are happier, their product's stronger, and now they're going to have more money coming in because they did that. And as a side note, I will tell you, just again, playing around with Firefly and seeing what it can do, I am concerned that Upwork and Fiverr are going to have a pretty negative effect from AI just in general. There's going to be, you're going to have the ability to do more with less, and I think a lot of the sellers on those companies, on those platforms, are going to be in trouble because you're going to have power users that are going to be able to do 10, 20 times as much as they did before. So it's going to be interesting to see how that works out for Upwork and Fiverr. Just kind of a secondary thing that I think we need to talk about, or at least think about.
Yeah, that's why I was going to kind of hit on that. The competition in this space, they're the 800-pound gorilla in the room, and it seems like they're stamping down as the first to market in a lot of this AI space. All right, great rundown, great data as always, Landon. Have a great weekend.
Thanks, guys. Have a good weekend.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us. Joe, and the strategy that I came up with on this one is kind of based on that, maybe that consolidation. But one thing we didn't mention also is that failed Figma deal, that $20 billion deal that they kind of abandoned. So they've got some free cash flow on their sheets of about $6 billion. Maybe some buybacks or something. Maybe that's supportive of this lofty valuation as their growth